Okay guys, in this video we're going to look at support and resistance scalping. So scalping off those support and resistance levels, that's your strategy. Let's dig into it. Alright traders, so support and resistance scalping is all about just staying to the strategy or aligning yourself with the strategy of, hey, when the market hits support, I'm going to do something. When the market hits resistance, I'm going to do something. Now, what you do depends on the current conditions of the day. So, in other words, let's go to the screen and have a look what's going on. What I mean by that. So, if we're in a downtrend, okay, and whatever the market's doing, it's pushing lower, it's pushing lower, it's pushing lower. When we get to support, we're not going to be buying it as scalpers. We're going to be looking to sell through support as long as the trend is aggressive enough. If it's a grinding up trend, I'm normally very cautious about buying through resistance. But let's say we're in a heavy downtrend, we're going to be selling through support because the draft and the drive will cause it to go lower. The only time we're going to use resistance is we're going to sell into resistance. So if we're in a downtrend and we push back up into resistance, then we're going to wait until we tag the resistance to hit the short again. So we're aligning ourselves only short, we're selling through support, or we're selling as we push up to resistance. If we're in an uptrend, we're not buying as we go through resistance, we're waiting until we push back to support and then we're buying. So this is the only thing we're doing. If we're in a rotational market, we're doing the opposite. So if we're in a rotational market and we're pushing down and we're pushing back up again and we're pushing down, we're looking to sell at resistance and buy at support. That's the overall kind of guide and approach that we want. Now, okay, analyzing what is a trending market and what is a rotational market sometimes can be challenging, but we don't need to overcomplicate it, guys. We can eyeball it and you can know it's a trend. And yes, the transition sometimes catches people out, but that's the way it is. We're not going to get 100% hit rate. So let's have a look at just the currency pair that we've got at the moment here on GBP USD, because there's actually a nice transition from a trend to a kind of rotational environment. It's still within a trend. So scalping on a 1 minute chart here, I personally think the 1 minute is the best for scalping. Some people like to use the 2, some people like to use other stuff, but I personally think that a 1 minute is good. So with support and resistance scalping, what we're doing is we're saying, okay, first things first, defining our support and resistance, obviously. Now, for me, support and resistance, especially when we're scalping, is a much looser term than it would be perhaps if we're on a daily chart. So in a daily chart, we probably want multiple touches, multiple kisses of a level. When we're sort of scalping, we can get away with saying, well, you know what, a low, just one low, really now becomes support. A double bottom is obviously support. So just one touch or one swing low, one swing high for me counts as support or resistance. So how would we be trading it? If we're in a trend, we're looking to push the lows and downside, and here straight away you'd get stopped out, right? This is just the way it is. You'd be pushing that, you'd have that as support. You'd sell into that. Unless you took it, you'd be stopped out on that. If you took it again, you'd be absolutely fine. But regardless of that, what I wanted to point out is the more interesting one is this here. This level of resistance that comes in after the downdraft, because this is what scalping is about, guys. It's about having a little bit of kind of common sense and saying, okay, we've driven down through there, regardless of what you've been trading in that. Now we're kind of holding in the lower third of that move and we're banging our head against this 1307 level. So your job as a scalper, forget about what's happening here. We're looking at the far right of the chart. I know that we're kind of looking at this in hindsight, so we've got to be careful we haven't got hindsight bias. But when we push up and we get a second tag of that sits there and just doesn't go through, that's our support and resistance scalping strategy to say, yes, we want to go short on that. And then we scalp it out as it pushes lower. We're not looking for home runs. We're not looking for fresh lows in scalping. We're looking for that impulse off it. And then pushes up again. We're looking to do the same. We're looking to do the same. We're looking to do the same until it stops working. The same stops working, we take a stop. We also can start to look to the downside, any resistance that comes up on the downside as well. So for example, we have a resistance here, so we might have sold that when it came back here and we stopped out for a small loss. We might have then used that as a resistance, and when it came back up onto there maybe, depending on where we had structured our stop, we might have shorted it here, maybe waited until there, but you see the point. The idea is, guys, is that we're aligning ourselves only when a key level is tagged. That's the important point to make. So let's go back and look at, so let's say another day and see what we've got. So this is a good example actually, because it came off this low. So in a rotational market here, we're looking to sell at resistance, remember, and as soon as we kind of go into an uptrend, then I would never be taking breakouts to the upside unless it was super explosive. So, you know, I wouldn't claim to take that kind of trade. But what you would be doing is saying, okay, we're in an uptrend now, I need to be looking to buy at support. So you'd be scalping off little support levels like this, scalping off this. That might be a scratch, to be fair, but that's the way you'd be approaching it. And then this is actually, to be honest, this is the kind of day that would test you as a scalper, going from rotational, then to uptrend, then to downtrend. And this is where risk management plays a key role. And you need to make sure that you're not getting slaughtered constantly on the wrong side of stuff. This is the kind of day that you look at your chart and go, I've taken 20 trades, I've lost kind of 15 of them, 5 have been winners, you know, I'll take it on the chin and move on to the next day. But the important thing is, guys, is that if we're trading with support and resistance, we're making sure that all we're doing is getting involved with the market at prior highs or prior lows. We're waiting to, if a rotational type trade, which is what we are in this little example here, we're looking to fade key levels of resistance. So we're fading this key level here, we're fading this key level here. Well, actually, this is the one we would fade because that one's only the second one after that push higher. At that point there, you would be fading if it went higher, but it didn't. So this time you're fading when it comes back to here. You're fading levels of support. There's a little level of support. You probably didn't get to there for that one. Next level is like round here. You can see some decent support down here, a big cluster actually of support. You'd be fading that because again in rotational you're looking at that saying, okay, that's the distance from the VWAP, there's the distance from the VWAP, and go and check the 3 or 4 videos back where we talked about this kind of strategy. You're trading only then at the support or only then at the resistance. So little cluster of resistance here you're looking to trade around, little cluster of support here you're looking to trade around. You're just looking to get involved only, and that's the key with support and resistance. And actually it's super powerful, because what it does is it makes sure that you're not getting caught out unnecessarily in things that aren't relevant. And that's the key with scalping, guys, is I think is whatever you can apply to it, whatever structure you can apply to stop yourself getting caught out and over trading is a win. And so by saying, hey, this is a support level, I want to trade around support, I want to trade around resistance, I'm only going to align myself with shorts in a downtrend, I'm only going to align myself with shorts at resistance, or vice versa, it means that you're not getting caught up in chop. You're not trying to follow things in breakouts. You're not trying to predict. You're just saying, okay, those are my areas to do business. When we get to those levels, I'm going to do some business, and the business I do is going to be based on what I'm actually seeing in that area. As long as we're in that area, then I'm interested in trading. Whilst we're not in that area, I'm going to wait until we are, and that will keep you at least on the right side of things and will stop you getting caught out in chop.